Good morning, everybody. Thursday, the 13th of November. It's the Flu Show. Don't know why I'm in such an energetic mood. It'll be gone by about 1 o'clock, I can tell you that. Must have been an extra sugar I had in my coffee earlier. Morning, Kay. How energized are you feeling this morning?
Hi, Ryan. Hi, everybody. Did you put a booster on your microphone? When you started, the whole house he was trembling. Oh my God! No, we're good. We're good. Let's be positive and jolly, shall we? Shall we?
Yeah, let's do it. Let's do it. Only 2 more days to go, and it's the weekend. So that's what we're all looking forward to. Right, lots to get stuck into, lots of headlines, lots of market moves. So we'll get cracking. I'll try and get through this fairly quickly. Right, data, Japan, PPI data coming in stronger than expected, 2.7%. Although the prior got revised up to 2.8%, so effectively it came down. But that's just tinkering with the numbers there. Month on month, 0.4%. Again, then another upward revision to last month. So anyway, inflation data still in the positive for that. We've had Bank of Japan's Governor Ueda up in Parliament saying that he's aiming for stable inflation backed by wage gains. It says the mechanism is in place for wages and prices to rise gradually, and said that the price trend is rising gradually towards the 2% target. No big explicit comments on monetary policy and what they're thinking next. Over in Down Underland, we've had another stonking jobs report from Australia. 42.2 thousand added to the labour market, with employment picking up the bulk of that, 55,000. The unemployment rate dropped to 4.3%, much better than expected, and it was good while the participation rate stayed unchanged. That pushes, in the market's eyes, the RBA further from rate cuts, and Aussie dollar has reacted to that, though it's reacted in some pairs more than others, Aussie Kiwi being one, but we'll look at that in a bit. SMB's Martin was speaking, and he had his fingers firmly crossed under the table when he said inflation is going to be rising slightly in the next quarters. Sounds like a bit of a hope trade for him, but we shall see. UK data, which we've all been sort of waiting for all week, came in pretty bad. GDP, this is the preliminary Q3 numbers, came in at 0.1%, was expected to come in 0.2%, down from a 0.3%. Monthly GDP came in minus 0.1%. Industrial production was a bit soft too, coming in down 2%, manufacturing down 1.7%. So all looking pretty bad. We've got a green improvement in the trade deficit, although once you strip out all the bits and bobs like precious metals and whatever, the deficit actually widened. So no, not really good news there. Now, over all this data, I mean, you know, we're talking 0.1s, 0.2s, 0.3s. Okay, there was nothing massive in the variation of the data here. Not a surprise to see it a little bit softer either. I think the market, not seeing good data, but it could have been far worse. And the mood that the market is at the moment, i.e. very bearish the UK. We saw a bit of selling in the quid, but nothing massive. So it wasn't data that suggested everyone should be piling into massively bigger shorts in the quid. But still, it doesn't make things any better for Rachel Reeves, who has a very, very flat economy in which she's got to now navigate her budget. One of the numbers that has been softening has been the investment numbers as well, as you can see at the top there. Not as much as expected in negative, down 0.3%, but this is a big falling trend at the moment. And that's not good news, again, when you've got an upcoming budget. So she's got a work cut out for her in a couple of weeks. That's if she can get through the political landmines that are currently floating about over there. That stuff continuing from yesterday, and it's still not looking good. So you've got a massive fight on her hands, her and Starmer, with some of their policies from within her own party, and that's going to be continuing to boil for the next couple of weeks at least. Kay, what was your thoughts on the data here?
Yeah.
Anywhere else?
Looks to be a signal for some shorts in sterling to take some chips off the table there. But as you say, it's a sea of red, but it's a shallow pond, right? It's not really. Yes, there are negative numbers, but it's not the very bad acceleration. So that's where I think we see this sterling actually doing better than before the numbers. Even euro sterling is back to just a couple of pips, but back below where we went into the data. So I do think though that and I'm going to stay away from cable because can't really I can't really sell it now um, because the dollar is doing a little bit worse, but I don't see too many reasons to buy it. So I'm still keeping my euro sterling long and see where we end up there for as long as we are above that 88 really right now. Not to speak about 87, 50, 70 or so, but um, it's still a trade which looks that it could have legs. And I mean, a round of take profit may make it look that sterling is doing better, but it may just be that as well. Just taking some chips off because there's been other news as well. In the sterling with the dollar on the defensive after the shutdown signing, etc. Yeah, so I think it's a temporary thing that take profit, but I'm not going to touch cable.
Yeah. I mean, we haven't seen anything huge. Cable, as you say, different kettle of fish. It got sold off, and then all that dollar selling, and we went flip the other way. So, yeah, I can't trade the UK through cable. It's just not. I don't think it's the best pair to choose, shall we say? Well, we both know that, hence why we're in euro sterling instead. So yeah, I'm going to stick to those lines. Right, moving on. ECB Schnabel says positive underlying momentum in the economy is being seen. Says food price inflation is still pretty strong, still seeing stickiness in services inflation. And that makes inflation risks tilted a little bit to the upside, ever the German. The main focus should be on core inflation. So she wants to do the old accounting smoke and mirrors in what inflation numbers important. Though she added, we can tolerate small deviations from the inflation target in either direction. Bank of France's Villeroy, he's still on top of the building shouting about victory laps and victory over inflation, because that's exactly what he said. He says the victory over inflation in France looks lasting. If ever that's a comment that's going to come back and bite him in the arse, that's the one. I'm going to put a little star by that one. Remind him of that later. ECB's book says markets are underpricing the geopolitical risk. That's been spoken with a supervisory hat on in that stance. Fed's Williams says that when reserves reach an ample level, gradual bond buying will start again. It will not be long before the Fed needs to expand its holdings again. But says it's an inexact science to determine whether reserves are ample. Says a renewed balance sheet expansion is technical, not monetary policy. Says he's closely watching markets for liquidity signals. Fed's Purley says strong evidence that bank reserves are no longer abundant and that the standing repo facility is working well and the balance sheet expansion is likely soon. Now, this is something we've been speaking about a while back when we were talking about the end of QT and everything. The Fed will be moving back into buying bonds at the end of QT. Now it's coming to an end. This is not QE. This is just to maintain the balance sheet levels to provide liquidity when it's needed. Liquidity isn't just a flat line; it changes. So they may have to change within that. There's a big move at the Fed to get people onto this SPR or SRF standing repo facility just for their liquidity needs, and it's going to be managed by them buying more bonds and whatever. We said it wouldn't be long before the first person uttered QE. You're going to get that as soon as we get the first really bad set of data points, which might be coming up soon. But as we've been saying, there's a lot of talk going on about the balance sheet and everything at the Fed, and it's going to become a feature over the months ahead. Now, Fed's Bostic, for what it's worth, he favours rates on hold until inflation is moving to 2%, but he's confirmed he will be retiring at the end of his current term, which is February next year, so he's off. Fed Collins moved into the undovish camp, saying she favours holding rates steady for some time to cool inflation. Was back in October happy to maybe cut again. Well, now she's had the cut. She's moved into potentially a holding pattern for now. Right, everyone's trying to guess read between the lines for all these Fed members. What's going to happen at December meeting? 84 of 105 economists see a cut coming at that December meeting. Kay, we've got a little bit of indecision going on. We got, well, certainly a lot of the Fed heads seemingly coming in undovish. We got, as you mentioned, the bond market, not sure. We got economists more sure. It's a bit up in the air whether they cut or hold at the moment.
Yeah, totally. I think we need to watch the data, Ryan, and that's what the bond market is doing right now as well. We came to a virtual standstill there in the yields, and I think it's not more than normal, right? If you don't have any data, because we know now that all the money managers, most of the big money managers, I mean, take the BlackRocks, the Vanguards, but even hedge funds, they use algorithms to tell them what the next position should be that they have. There is percentage-wise more mathematics ongoing than human involvement, psychological position trading. So they don't have data. The bond market isn't moving because they can't do the next leg of position taking or get out of position. So there is this discrepancy between what the strats are waiting for, are expecting, and what really the market is doing right now. Sorry, and we kind of find it back in those markets like equities maybe still a bit more positive, but I mean FX is, let's face it, we're in ranges there as well, right? But it is, euro dollar is back above 116, but I mean we had, if you take from the opening or even from yesterday, we moved 40-50 pips. That's not something where you call it okay, now the market is taking a direction, right? So yeah, we're all waiting for data now, and then we will see how the market is going to price itself or to position itself for the next Fed meeting. And I think the Fed heads are somewhere the same. They lean towards a pause, but they are not going to need much to flip around again. I think if you get a bad set of data, the market is going to tell them to cut, right?
Yeah, very much so. And yeah, we're going to have to talk about this data as well, because it could be a complete mess. In theory, as we were told, the September data might come next Tuesday, according to BNP's guessing. We could not or might not get the October NFP. Either way, the September numbers, the October numbers, it's going to be messy because we were waiting on all those Doge cuts to show up somewhere. We're waiting on the furloughs from the shutdown to show up somewhere. So this data is not going to be clean. Whatever we get, September, October, November, it's not going to be clean data. It's going to have a lot of skews, potential skews in there, and we're going to have to sift through to see what is really happening with that data. If we get a minus 600,000, September or October NFP, but 500,000 of that is furloughed government workers, that makes the jobs report not as bad as the number suggests. So we're going to have to decipher all this stuff, and it's going to be a right old mess, as we've been saying for a while. But anyway, we can talk about that once we know when we're getting it. Right, we did have a 10-year sale auction last night in the US, which was a little bit mixed. Not as much demand. 2.43 was a bit to cover from 2.48 previously, but there was a slight pickup in indirects, i.e. foreign investors and other institutions. That went up to 67% from 66.8. So overall, I think another one where it could have been worse.
Yeah, small tail. Well, I mean, just look at what the yields did, which is nothing, right? So we're over. We just said it a couple of minutes ago. The bond market is in a wait and see mode. Yeah, that is exactly where we are. So the 3 years were good. The 10-year less good, and until the data, we are going to see exactly the same thing happening, and without being able to make or to take any to draw any conclusions from it.
Yeah, I think the conclusion is no dramas. Move on.
Exactly. Yeah.
Speaking of drama queens, the Bank of Canada released their summary of their last meeting, saying that rates are likely close to the limit of the ability to support the economy. They said they debated delaying cutting rates until after the October meeting. They also said they thought about waiting for more info, including what was coming on Carney's budget. So they're definitely probably after that jobs report the other week, very much in hold mode at the moment. OPEC, they left their forecast for global oil demand growth for this year unchanged at 1.3. They also left 2026 unchanged at 1.38 million barrels per day. 1.3 million barrels a day for the 2025 number. Besant, he was squawking about, saying we will see substantial tariff news in the next couple of days. He says there's going to be relief on coffee and other food items like bananas. He said the economy was in a great place before the shutdown, and thinks that any problems are going to be a slight hiccup due to the shutdown. He's taken a bit more of a fiscally cautious stance in regards to these $2,000 payments, saying, or rebates. He said they will be for people making less than $100,000 a year, but it's not decided. He was speaking about the bond market as well, saying he repeats the guidance that coupon auction sizes likely will not need changing for several quarters. Says that the Treasury will adjust issuance gradually to avoid market disruptions. Saying strengthening the Treasury market is part of their mission to make America affordable again. I think, well, that's the acronym for that one. Hassett, he says the shutdown is likely to see GDP coming in at 1.5 to 2% this quarter. He also said strong dollar policy is a sound policy. And if he's not selected for the Fed, he will still stay in the Trump administration. But if he is selected, he's pretty much ready to go. Secretary of State Rubio says Russia does not really want peace at this stage. That's a subject that's dropped off the front pages recently, which may come up if they have another meeting between Trump and Xi. So we're at the shutdown. That's all signed, sealed and delivered. Mr. Trump put the rubber stamp on it after it all got voted through last night. The White House has told federal workers to return to work today. So things are going to start opening up. Everyone's got 30,000 emails to get through from the last 43 days. As mentioned, White House Press Secretary Leavitt says the October CPI and jobs report are likely to never be released. This is due to the fact that having to go back and ask people, hey, what happened 6 weeks ago in October, is probably not the best thing that can happen to get reasonable data. So they might be skipping the October data. But as I said, September data could be released quickly. As mentioned, BNP guessed that it could come as early as next Tuesday. So we're in wait and see mode for that. Kay, anything else of note? I know there's been going on in South Africa and whatnot.
Yeah, some good news actually for South Africa on the budget, etc., and inflation trying to pin it down lower, which would be a bit of a boon for these budget considerations and reduce the deficits over there by as much as 50 billion rand, or so, I think it's rand that they meant, little over 50 billion rand less in budget spending if they succeed, and the market is taking it quite positive. Rand seems to have over the past weeks gone back onto the carry trade, as well as I've been reading across a few strats and stuff. And they are actually where a lot of concentration was maybe before in the Mexican peso. They seem to have a bit spread out now and actually gone also into the rand. So there's a bit of a tailwind going on for the South African rand over there. Elsewhere in the news. Okay, there's been this shutdown news, but there's a lot going on in the States as well about those Epstein files, and I'm not going to pronounce myself on a potential result for Trump, but could it just be the start of the Dems coming back because of the lack of confidence coming creeping in over there, right? So maybe a bit of a political mess as well for Trump. So perhaps we just have to take it into the mix of when we look at what the dollar or some markets also are doing, because there may be some lawsuits coming as well. I think so. Just keep an eye on it. And I don't think here we have the right venue to talk about. We are not in the States either. But it's just something that pops its ugly head, roars its ugly head up more and more frequently.
Yeah, that's politics. You know, now we're over the shutdown effectively. Well, at least till the end of January. So the market can drop that bone and it's going to move on other things. And if it's political footballs, they're going to kick it around. You know, we're going through the same thing here in the UK. Different subjects, but the same action. So yeah, politics is politics, and we'll see what comes next for the market's focus outside of the data to come. Right, that was the all that then. Right, let's get into some price action. Kay, why did we get a dollar sell up? I mean, it started well before the usual Mr. 8 a.m. man, but is it just a bit of maybe models reaction catching up after the shutdown's over and that sort of thing?
I think, but it was coming. We've been talking about this in our chat room as well, especially in the Flowonomics room. It kind of felt coming, this thing, right? We had a bit of an initial reaction to when the shutdown may end, and then I'd argue that first the euro was showing some resilience. We could argue that it's like a bit of a negative risk thing where the euro crosses are creeping up, apart from the yen, of course. But and Swiss is a different story now as well, since they could be signing today or tomorrow an improved trade deal for them. But it was kind of feeling that it was coming, and now we are over this hump of the signing. The market it's just looking at it to be a plaster on an open wound. I think because everything in it's until end of January. Okay, they may have saved the turn of the year, but we are probably going to go back into a load of discussions and political ping pong into the next one. And it's let's face it, only 2 months away, right?
Yeah.
So I guess that's a bit of a reaction there. It was kind of coming. We saw that on like the inability, especially the euro dollar, to get down, on quite positive dollar news. And then, yeah, maybe the reopening, the market is also thinking that the set of data that we are going to get now are going to be bad based on the few job reports that we may have laid our eyes on over the past week or two.
Yeah, exactly. And we've had a decent rally in the euro this morning. It's got up to a sticky area from 116.30s up to what will be the 38.2 fib of this leg that we had since September. This leg lower, so it's run into trouble there. I think you've got to be watching just around here, this 116 to 116.10 area. If we're going to keep this break and push on, we need to hold around here. Otherwise, we risk going back, and just these highs, just that we struggle to get and hold above previously, will come into play again. But yeah, if it holds here, 10 to the figure, I think it's got every chance of pushing back up. But wait and see what the Yanks want to do with it. Ali, you're asking about dollar yen. Well, we've had a little break out the downside. It hasn't held. We're back in the box. This is still really the battleground. 154, 40s, 50s, and up to that 155 level. If there was any barriers or options or whatever up there, we've cleaned those out because we poked through a couple of times, but we cannot break it and properly and hold it. And as I say, this dip got brought up fairly quickly underneath. So I threw away the rest of my longs last night while I was in bed. I thought I've got a little bit left. I don't want to run the risk of giving a chunk back on a gap or anything like that if they decided to pull the trigger in Japan on intervention. So I just folded it up. So I'm flat in this one, and I'm probably gonna sit on my hands for a bit just while we see what's going on with this moving forward and what Japan wants to do with it. I'm certainly not going to be holding any long positions in yen pairs going into a weekend, I can tell you that, and that's a risk you need to keep an eye on as well. If anything, if we do see a bit more volatility, if we bust through 155 and it goes quickly up to 156, I might even think about putting on a few little shorts or a small short of an evening just to maybe catch some intervention, but you can't rely on it. And as I said yesterday, we're into that dangerous position where if you're long yen pairs, then you've got the threat of intervention hanging over your head. If you want to short it to try and catch intervention, it can grind against you for 200-300 pips before that happens. So it's one of those situations you get when we get these intervention moments where you can't really short those pairs and you can't really long those pairs either. And that's what I'm feeling now. So I'm just going to sit on my hands for the moment. You're also asking about dollar CAD. I was looking at this level to maybe add to my longs, but been talking about it since all week. Since that jobs report, we have changed mood. We are now not in a dip buy mode. We're in a rally selling mode, and I'm not so keen. We're below 140. We had a little dip yesterday. It rallied, got back up to the sticky level, and now we're back below. And I think if we're holding below this 140 on a retest, then we could be heading lower. This level still might be valid, but maybe only as maybe a bit of a first test basis. If we start knocking on this door quite a lot like we did here at 140, I won't be so keen on it. So yeah, it's still a valid level in my opinion. Might be worth a scalp trade, but I haven't got as much conviction in it as I did have before. And if we do break there, we're probably heading down to test the mid to low 139s on the back of that. Right, I was mentioning Aussie Kiwi earlier as well. This one could be interesting because we've had this big move up on the back of the jobs data. It shot all the way up to near 116.40 before coming back down below 116. And the reason this might be significant is if we start finding resistance again, just in this area from 80s to the figure 90s, whatever, that could indicate we've got a bit more of a top building. And then that might be something that will interest shorts. And I might have a little look at that. Because we've had this volatile breakout, but if now we're back under, if we continue to hold back under, as I say, that might suggest we might be building a bit more of a top. But if we do go and waffle through, then yeah, we're probably not done. 116.20s just into there, or 15.20s, and then the highs are the next numbers to watch from here. But this one still looking reasonably strong, but the Kiwis certainly motored more than Aussie dollar has. When we got that dollar sell-off, and that's been a speed driver of why we've come back down. Dollar MEX, still keeping an eye on that one. That's creeping lower and lower and lower, still moving. Now we're below this 18.30-31 area and looking like we're holding it. So we could well be getting a test of this low area down here. And I'm watching this one for a potential long. Not something that I might stay in for too long, but if we test and hold it, it's still a solid level. We could start to play off the bottom of this range like we played off the top of it. So the range is the range until it gets broken. Right, Kate, I'm going to ping it over to you, mate.
Mm-hmm.
Oh, right, get the right button. There we go.
Okay, let's first of all talk about another pair in the yen. I took it off this morning. That was my plan, even though we could argue that there's nothing's changing because as well, ASO was talking about loose fiscal policy, and then Takeichi again overnight said that they were going to do whatever they can to get the economy back on the road, and actually gave a kind of a wink to the Bank of Japan, probably while Ueda was in the audience as well, since he spoke in Parliament. Telling them that they should do the right thing, which is wait to hike for much more before until we start funding our extra stimulus. So that really should keep the yen under pressure. But first of all, this one that I showed you already yesterday, we tagged it. This is a weekly, right? A weekly. This is a nearly 30 years chart here, and then also in addition to that, we tagged the top end of the channel. Now, as I'm pleased to say, these in when I speak to people in the room, especially about gold, etc., this is just a line on a picture, right? Doesn't mean that it has to stop here, and we could easily continue this up into the 181s and so. But that was my plan, and I stick to my plan, and I took off the rest of my euro yen right here around 179.70. So that's a pretty good run. And just sit back and wait, like Ryan said. I mean, there's times where if you trade your plan, you follow the plan, you stay disciplined, and you don't start to buy right at the top and trying to find a bigger fool than yourself who is buying higher than the top from you. I think it's time to let it do its thing a little bit. Could run higher, so be it. But a plan is a plan, so that is gone. Well, yeah, we got to move over to the metals. This thing is so relentless, and actually today we have to look at both because they're starting to diverge a bit again. So gold didn't look back, went up to the 61.8. had a bit of a rest just above. We had this, I think, is around where Trump signed the shutdown. A little bit of a setback, and then we straight away going on. I mean, it is still the market is still thinking that this is the best thing to have, and I actually would argue that the market was probably a bit short, hoping for this shutdown to bring gold back down, but it just doesn't work. And we can see that whenever whether it's the US or the Asian session, it remains bid in both of the main areas or geographical zones who have been seen to be the bigger buyers. It just remains bid. So I'm not going to stand in front of this. We could run into a bit of a target-ish of this move and then see a bit of a setback. But to look for bigger retracements, we have to already get back down below 41.85.90, and then we have been building on levels here as well that could show up even before any bigger boom bust lines. Okay, silver is pretty strange is not the right word, but we again we went to nearly tag that all-time high again this morning, and now it's just lost nearly $1 in the past hour or so. We lost some yes, yeah, nearly $1, right? We're back on the 88.6 here of that correction move. Could already be enough, but it's silver. It's very, very volatile, this one. But if we get a close above this prior all-time high, there's absolutely no reason to start countering this. Okay. All in all, still very big. And just looking at those levels, if we get deeper retracements, we have just been on a smaller one, but then you have another one around. Remember, I was talking about the 52.5 would be already a level, and then there's probably going to be more levels to the downside if the party is to continue. But we have to respect it at all-time high. Okay, so I wouldn't really go and buy into in go and chase much. But problem is here. Well, the problem for people who would like to counter it is that if we get above this prior all-time high, yeah, there's a bit of a 57 in there. But I would say that the speculators or those who really need it, they are already going to eye at the next big one, which is going to be 60, right? But and if you take the width of this move and you add it on top, you're ending actually a little bit above, but you're ending not too far away from the 60 level. So let's see if they find the liquidity, if we are going to see the drying up of the buying, but both metals, I haven't looked at the others, but both metals are still behaving extremely strongly. Oil still feeling quite miserable, can't hold rally still. We tried to rally again yesterday, but it's failing already. So the day before yesterday that was, but it's failing already, and I still think there is a risk that we are going back to 55 at some stage over here. Okay, anything else? Maybe we need to have a quick look at the Swissy because of the potential of the signing of the revised sweetened trade deal for Switzerland. Okay, they're talking about 15% back from the 39%, but is pharma going to be in it? Is not something that I had. I've seen any confirmation. Is it like the blanket signing of 15%? That would be actually a pretty good trade for Switzerland then. And so we are actually getting. Oops, no, I'm on the wrong pair here. I thought I was on the wrong pair here. And we're coming into to relatively interesting levels here, and it's important because if you look at this 79.15-ish, if you take into account that Swissy could remain also relatively bid on the crosser side, it could coincide with some of those levels in the euro dollar. I would say maybe the 79.35 is a bit close to where we are, but this could be your 116.40, and this could somewhere be your 116.60-70 in the euro dollar, which, if it would break, would open the door to a move above 117 if you talk about euro dollar, and this one could be in for the next 50-60 points. So this is one where I'm rather going to look at retracements, maybe up into high 79s. I may actually give it a go and try a short if we see a bit of dollar buying over the course of this session, or even tomorrow, unless we get bad news or bad last minute news on that trade deal. But just be aware that they are going to sign this, and we could see another bit of a leg lower. Now, Euro Swiss. Are you out of yours as well, right, Ryan? You're out of yours.
Yeah.
Yeah,
My
you're out of
trader
it.
got hit. Yeah.
Yeah, okay. We are nearly back there, right? Another, well, okay, we're 92.40, but it's another 30-40 pips. Watch out, because if it breaks on now, the market knows about this sweetened deal, but if it breaks, we could be in for a look down to 90 even perhaps, or uh, um, in this Euro Swiss. But then I think that SNB will be there if we see another big drop here, because they will be very close, having a very close eye on this one. So beware for any like smoothing, or at least news on the Swiss franc if it goes below 92. The figure, I don't know what you think, Ryan, but the opening below 92 on the Euro Swiss is probably going to drag them out of the woods, right?
Yeah, no, I think so as well. But I mean, that price action just doesn't look good, does
No,
it? Every rally just gets smaller and smaller
it's
and
horrible.
smaller.
Yeah,
Yeah,
it's horrible. I mean, if you look at the oil picture, it's a bit the same. And just all the highs that we can print, they're getting smacked down straight away, right?
yeah,
So this is still a picture. It's looking if you look at it purely from a technical aspect or a picture view, this is looking ugly. This is really looking for all right. Let's go and try for the break at some stage, right?
and it's coming down far faster than it went up in this
Yeah,
phase.
as well. Okay. Ryan already spoke about Aussie Kiwi. The Aussie dollar itself is finally, it broke loose of this very tight range that we had from the start of the week. I Well, I mean, it's relatively simple, I would say, on the Aussie. It has to hold this. Well, 57 is the 61.8, but I think really 65.5, and then here this zone that we've broken up, that is now having to hold right on the Aussie dollar. We're trading around 65.70. Here is a little bit of a zone here between 70 and 85. And actually, that 70-75 level has been shown up as well. So keep an eye on that. If we close above, we're probably going to open the gate for a move back into that higher back into the 66. I need to clean my charts. Okay, you need to really clean your charts. And then we're looking at a wider trend line. If we get back above 66, 66 figure 20 is where really it's going to even stretch it to 25. Where the real levels are, okay? All of this is still a lot of range, but here are the real levels to me, 66, 15, 25-ish. If that breaks, then we can move higher. But for as long as that doesn't happen, I would still view it as a broader range, okay? And I think I'm going to give it back to you, mate. I think.
Yeah, thanks, mate.
Okay.
Brian, you're talking about oil and that negative number we got. Okay, you need to pretty much ignore that. That was an anomaly. Okay, that was messing around in the market. By people over here, funnily enough, in a little trading shop. It. You can't take that as real. Okay, so if you're writing your tech levels off of the negative number, I would advise you against it. Go to the next clearest, more realistic, more real candle and price action other than that, because everyone's got different lows on that as well. And as I say, it was a complete anomaly in terms of what happened there. Right, on that basis, thank you very much. Yeah, go on, mate.
Yeah, if you look at it, we can't even. I've put it down at a buck, but that's not even real, right?
Exactly. Yeah.
Yeah, I think maybe the right one could be around here, because that may have been traded, because it's a second one, because it's a daily one.
Yeah.
Huh?
That's the one.
Maybe the one to take around here is rather around $10 or so.
Yeah.
All
I
right.
think that's where I draw most of my tech off. And I've done it the same on when we've had, the Brexit moves and the other stuff. I tend to look, if you don't know where the low is, or if it's not a defined low, like everyone's got it, you take the next workable piece of price action. But anyway, yeah, that's it for today. Thanks everyone for coming to the Flow Show. Have a great Thursday, and we'll see you all tomorrow.